Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings to understand what's really going on behind the numbers. Today we're diving into Banzai International's latest filing, and let me tell you, it's a deep dive into a company trying to navigate some pretty choppy financial waters. With a lot of complex deals and a very interesting name for their stock. Stick around because we're going to break down what it all means. Before we start, if you appreciate getting straight insights from corporate documents like this, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat with other finance enthusiasts. Now, let's get into it. Banzai International. Incorporated, it is a software as a service company in the marketing technology industry. They provide tools to help businesses market and sell more efficiently. They've picked up a lot of customers, even some big names like RBC and Dell Technologies. Their strategy seems to be growing through acquiring new customers, expanding their platform with new MarTech products, and cross. Selling to existing customers, they've made a couple of acquisitions recently, OpenReel and Vidello, to beef up their offerings. They've had a recent leadership change, appointing Dean Ditto as their Chief Financial Officer in July of this year, replacing an interim one. This is often a sign that a company is serious about financial stability and future growth. Now, here is something that catches the eye. They recently did a reverse stock split, a 1-for-10 split for both their Class A and Class B common stock. This is often done to increase the stock price per share and make it more attractive to institutional investors or to meet exchange listing requirements like NASDAQ. They did a similar split last year too. This can be a double-edged sword for investors. It can make the stock look more substantial, but it doesn't fundamentally change the company's value. They're also using Ant at the market offering program, essentially selling shares into the open market from time to time. This is a way to raise capital flexibly. Between October and November of last year, they sold over 657,000 shares, bringing in almost $1.5 million. It shows they are actively seeking funds, which can be good for growth but also hints at potential financial needs. And speaking of finance, they've been busy. In June of 2025, they entered into a deal for senior secured convertible notes totaling a significant $11 million. These notes can be converted into shares of their class of common stock. This is a common way for companies, especially those looking to grow, to raise money without immediately diluting existing shareholders too much. But it does carry conversion risks. Then they followed up with another note issuance in August for $2.2 million and another in October for $2.5 million. This shows a consistent need for capital, and we'll need to watch how these notes or the shares they can convert into affect the stock from a dilution perspective. This is a big one. They have a standby equity purchase agreement, or SEPA, with Yorkville Advisors Global LP committing up to $100 million in shares of class or common stock. This is a massive commitment. They've already used some of this issuing shares to Yorkville. When market conditions allowed, it's a way to secure potential funding. But it also means a lot of potential dilution for existing shareholders if Yorkville decides to purchase a lot of stock. Now let's quickly look at the financials because that's where the real story often lies. As of the 30th of September 2025, their cash position was around $851,000. That might seem low, especially when you look at their liabilities, which are over $27 million. Their total assets are about $33 million. This shows a pretty tight liquidity situation. Looking back at the end of 2024, they had about $1.1 million in cash and over $28 million in liabilities. Their total assets were around $25 million. This indicates a worsening liquidity position from the end of last year to September of this year. For the first 9 months of 2025, revenue was $9.3 million. That is a huge jump from just $3.2 million in the same period in 2024. This growth is largely thanks to those acquisitions we talked about, OpenReel and Vidello. However, their net loss also grew significantly to over $17 million, up from nearly $24 million in the prior year's period. So, while revenue is up, they're still losing a lot of money. Looking at the full years, revenue in 2024 was about $4.5 million, a very slight decrease from 2023's $4.56 million. But their operating expenses jumped significantly, leading to a much larger operating loss of over $13 million in 2024 compared to around $9.8 million in 2023. This is a tough trend. with expenses growing faster than revenue. In terms of cash flow, for the first 9 months of 2025, they used about $13.4 million in operations. That's a lot more than the nearly $5.4 million they used in the same period of 2024. Financing activities provided over $15 million in cash in the first 9 months of 2025, mostly from issuing debt and equity, which is how they're keeping the lights on. For the full year 2024, their cash used in operations was about $9.6 million, a big increase from 2023's $1.5 million operating cash burn. Financing activities provided over $8 million in 2024, which helped offset the cash burn, but it is still a concerning trend. Now, let's talk about the risks. They openly admit to raise substantial doubt about our ability to continue as a going concern. That's investor speak for "we might not make it." They've incurred significant operating losses and may never become profitable. This is highlighted by their need to continuously seek capital, and Therese no guarantee they'll get it on acceptable terms. They also point to the high volatility of their stock price and the potential for future sales of stock to depress the price. And here is an interesting point about leadership. Their dual-class stock structure concentrates voting power with their CEO Joseph Davey. This means he has a lot of control, which can be good for decisive leadership but limits an investor's ability to influence important company decisions. This kind of concentrated power can sometimes lead to decisions that benefit insiders more than outside investors. They're operating in a super competitive MarTech space, facing giants like Vimeo, Zoom, MailChimp, HubSpot, and Braze. They admit their competitors may have significantly more financial and technical resources. This is a tough fight for market share, and it is a big risk for a company that is still struggling with profitability. They also caution that their future forecasts and projections are based on assumptions that might be wrong. This is a standard disclaimer, but given their current financial situation, it is one to pay close attention to. So, what does all this mean? Banzai International is in a growth phase, heavily reliant on acquisitions and financing to stay afloat. Their revenue is growing, which is a positive sign, largely fueled by those recent acquisitions. However, their mounting losses, significant debt, and the explicit mention of substantial doubt about their ability to continue as a going concern paint a rather precarious picture. The dilution from convertible notes and equity issuances is also a major concern for existing shareholders. While they have a strategy, executing it amidst intense competition and without achieving profitability remains a huge challenge. For us looking at this from the outside, it is a bit of a mixed bag. The acquisitions show proactive steps towards platform expansion, but the financial health right now is very concerning. Many companies in the MarTech space are seeing strong growth. So the question is whether Banzai can truly leverage its acquisitions and find a path to profitability before its runway runs out. The concentration of voting power is also something to consider for those looking for shareholder influence. Alright, that is our breakdown of Banzai International's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.